markets are going to expand so much. And yes, am I a permeable? Absolutely. But I don't think that this is going to stay in chips. I think this is going to bleed over into the rest of the sectors. I think that we are going to see that AI becomes a game changer for companies and they become so much more efficient from utilizing AI that it will show up in their forward earnings. Now, financials are a sector that I think will benefit dramatically. There are so many back office processes that I think will be automated, and I think that they will be able to increase the revenue per employee. I'm looking at companies that have huge SG&A budgets, and I'm thinking, how do they monetize AI in the way that benefits earnings and revenue? I do think that we see the markets really catch a bid, especially if we get to the point where we start getting rate cuts. We get rate cuts. Wow, 60-40. We're going to stop the poll in a minute. So get your votes in. And if you're not following basis points, please follow it. It is we're getting so much really great feedback on it that I am so excited. Chels was with me, and I'm going to say this. I only had one pizza place. It was good. I'm not going to shit on Chicago pizza. Chicago pizza was good. It does not hold a candle to New York, but the chicken parm I had was excellent. That's all I'm going to say. Chicken parm that I had was awesome. And we went to Gibson's for dinner on Friday, and it was an incredible meal. It was incredible. I mean, part of what makes it is the people you're with, and it was just such an amazing group of people that it's one of those dinners that I'm going to cherish for the rest of my life. There's no question about that. But the food was great. The food was absolutely great. Yeah, I agree. Friday's dinner was absolutely incredible, except that Amit may have, you know, caused a little bit of a party foul. So, unfortunately, he was a little clumsy. Oh, I wasn't gonna say it, but yes, Amit spilt wine on shells, unfortunately. It was one of those things you kinda had to be there. Kinda had to be there. Alright, hoodie and hat. Looks like, I got some soul searching to do. Looks like I got some soul searching to do on how I'm going to dress. Interesting, they are talking about financials posed to break out. I actually agree with this. And I don't know if enough people really follow the financials, but they could.
Probably why you're seeing the fact sets of the world and some of the publicly traded data providers really get impacted by this.
But if you turn that around and you look at the alternative asset managers, for instance, the bar is continuing to be set pretty low for these managers because there is, to Steve's point, this concern about potential contagion or spreading of the private credit challenges. And so really looking at the underlying fundamentals of those businesses, there's also starting to be some interest on the institutional side in some of these BDCs. And so you're going to get to a point where whether you're investing just in the financial sector on the public side or whether you're an institutional investor looking to potentially create some value out of, perhaps assets that have been priced lower appropriately, but now look more attractive. Those are some things that I think we need to be watching. And so if you look at the second half of the year, we wouldn't be all that surprised to see a bit more interest in these alternative asset managers, particularly as distribution rates from their traditional private equity portfolios are ticking up.
Yeah, no, you definitely see outflows largely from retail, inflows, which there are inflows. People forget to mention that from the institutional side of things. Now to Mackenzie Sagalos with a CNBC News update. Hey, Mac.
Hey, Leslie. Here's what we're watching this hour. The Food and Drug Administration is seeking public input on repurposing approved drugs for potential new use.
Okay, don't really care about that. But Shannon could be right. You look at JPMorgan Chase. Let's bring this up. Let's pick on JPM. Not that I'm picking on them, but let's bring it up. If we think that AI is going to do what we think it can do, just on the income statement, okay? Their total salaries and other employee benefits, $43 billion. Total selling, general, and admin expenses, $31.7 billion. Are we going to really say that they're not going to figure out a way to save money? Are we really going to say that? I think that the financials will be one of the next sectors to really benefit from AI. And then I really do think that we're going to see warehouses and the conglomerates really benefit. And I think that that's going to be the key to unlocking not S&P 8,000, because I think that that's going to happen regardless, but getting to S&P 10,000 over the next several years. I think that that's a real reality by 2030, maybe even sooner, maybe 2029. And I don't think that that's a crazy thing to say. Think about this. S&P 10,000 from where we are, 35% away. 35% away. You could have that potentially next year or the year after in 2028 if we get a big rally. We've had years where the S&P really runs 25%. Diddy S&P 10K is end of 2027, in my opinion. Maybe. I don't know if it's going to happen that quick, but it's possible. I think 2028 is more realistic, but I'm with you. Even if we get a downturn, I do think that we're going to see robotics and AI be the narrative that allows